The people who don't get hurt in inflationary cycles are people who are producers who just get to continue to raise their prices with inflation. All righty, here we go. Another episode of the Main Street Patriot Podcast. What number is this one, Jake?
This is number 8.
Number 8. Boom.
Oh, 7. Sorry.
You got ahead of me there.
That's right.
All righty. Well, welcome back to the Main Street Patriot Podcast. So, episode 7, we are going to talk about the 5th pillar of wealth building, inflation. And now, Jake, inflation can either be a wealth builder or a wealth destroyer. It just depends on where you're at. Where you position yourself.
Sure, yeah, okay. So for all listeners out there, that's why this is so important, because it could destroy you potentially.
Yeah, if you look at the media, everybody gets destroyed from inflation, and it's just not true. And so the way you position yourself is whether you'll get hammered from inflation or whether you can use it to your benefit.
Sure.
And that's what we're going to talk about in this episode.
Okay, nice.
But first, by the way, producer Jake wants me to continue to remember to do the but first. So I'm going to have some fun with these in the next episodes. But first, if you're looking to see, hey, what's going on in Ranger Real Estate and you're not quite ready to join the group, check out our free Facebook group. Just search Ranger Real Estate, how to get wealthy on Main Street. And inside there, we're going to be posting deals that we have for sale. We're going to be posting videos. We're going to any information. I'll also be answering any real estate questions you may or may not have in there. But so check out our free Facebook group. Now, Jake, back to inflation.
Yeah, here we go. So where do you start with inflation? How do you wrap your head around it?
I think first you need to understand it. I think second, you need to understand the history of it, because history is wrapped with inflation.
Ooh, okay. I love history. You know that about me already. So...
And you're going to need to understand the politics of it. And then finally, I think you need to understand the numbers.
Mm-hmm.
And so where I got most of these ideas, I'm going to give a quick book reference, but it's called A History of Money and Banking in the United States by Murray and Rothbard. And then there's also a new book called The Principles of Dealing with the Changing World Order by Ray Dalio.
Nice.
So what I'm hoping for, Jake, is by the end of this podcast, at a minimum, people will have an understanding of inflation and maybe see some options to make it use it for their benefit.
Yeah.
And so it was really interesting as I was starting to go along in this journey and reading Rich Dad, Poor Dad. There's a little bit on inflation, Rich Dad, Poor Dad, but then there's also a book called Rich Dad's Conspiracy of the Rich.
Oh.
And, Kiyosaki, to his credit.
By Kiyosaki?
Yeah.
Okay.
He writes at an 8th grade level.
Yeah.
And so he's not insulting people. It's just he's trying to get people engaged and introduced to all this.
Yeah.
So
keep it simple.
Yeah. And so it was really interesting. So the Murray Rothbard book is like a master's level in history book. Like, it's dense. It's really hard to read.
Yep.
And when I was like, man, wait a minute. Kiyosaki and then this history professor are talking about the same thing.
Oh, wow.
It made me trust Kiyosaki more. And then it made me feel like I was definitely onto something.
Yeah.
And so I'm going to start out with a premise as we teach this inflation. But, and I said this in a previous podcast, the United States, greatest country on earth, is a country created by real estate investors for real estate investors. And so I have it's not a conspiracy theory, but I have a idea that's not everybody knows. And so that doesn't make it a conspiracy. It just makes an idea not everybody knows.
Sure.
But in designing this country, the founders needed to use English common law, which protected title to real estate. Mm-hmm. And they also knew to make the most, this isn't a conspiracy at all. Thomas Jefferson had the idea of the yeoman farmer with his own land, developing it to its highest ability.
Right.
So the new yeoman farmer is the real estate investor. And so they structured the tax code to benefit that person.
Yep.
And, right or wrong, politicians have the ability to incentivize behavior.
Right.
And throughout the history of this country, real estate ownership has always been incentivized.
Yep.
Now, what hasn't been incentivized is responsible spending from federal dollars. And, there's been like the dollar has lost 90% of its value over the last 100 years. Were you aware of that?
No. Oh, I mean, it makes sense.
But
Like purchasing power wise, yeah, things are so expensive compared to 100 years ago.
yeah, what you can get for $1 from 1900 now gets you about the buying power of 3 cents.
Yep.
So kind of rough.
Yep.
And, people remember big inflation crises like the Weimar Republic after World War I, before Hitler. Germany's currency went to zero.
Right.
Because they were just printing money to pay for war debts.
Right.
And then people maybe remember when Zimbabwe, when their currency hit hyperinflation. It's happened in Argentina as well. But how many times has it happened
Greece?
here?
It happened in Greece a couple years ago.
Happened in Greece a couple years ago.
Yeah.
How many times has it happened in the United States?
Hyperinflation? I can't really.
That only happens in poor, broke countries, right?
Yeah. Well, maybe, yeah.
So it's happened at least 3 times in the United States.
Okay.
So there was a collapse of the continental dollar.
Okay, sure, yeah. Okay.
During the Revolutionary War, there was a collapse of the Confederate dollar in the Civil War.
Oh, yeah.
Technically, the Northern dollar collapsed too because they had to go off the gold standard for a while.
Right.
And then in 1971, when they had to close the gold window and detach the dollar from from gold.
Yep.
Technically, another example of where a currency failed.
Okay.
And so, as I was reading this Murray Rothbard book, you look like you got a question. What do you got?
Well, so the first two are related to wars. So is that a thing?
Yes.
And okay.
Yeah, I'm going to get into this. We're going to go. You know how like Trump goes on different people's podcasts and weaves in and out? He calls it the weave.
The weave. He's the best at the weave.
We're weaving today.
Okay, here we go. The weave. All right.
And so I started thinking to myself, we're the most prosperous, greatest economy in human history, but our history with inflation is not great. And so I'm like, wait a minute, if inflation's this wealth destroyer, how can the history of America be riddled with poor currency management and we're still so wealthy?
Yeah.
And so I was like, okay, well, then maybe some people win in hyperinflationary environments. And, who are those people? And so I started studying.
Yep.
So we got to go way back. We got to go to the story starts in the Massachusetts
I love this.
calendar.
Story time. Here we go.
Yeah. I'm going to tell the whole history of the United States currency and its poor history in the next 10 minutes.
All right.
So we got to go back to before the Revolutionary War. We got to go back to money printing in the colonies. And so the first time money was ever printing in the colonies was like in the 1600s in Massachusetts. So what used to happen in Massachusetts was every spring the militia would get together and they'd go raid Canada. Kind of a big deal why the French Canadians didn't join us in the Revolution. They didn't like us much because we had spent about 100 years raiding them.
Okay.
And so, well, how do you convince a soldier to go raiding every spring? Why would they do that?
Bonuses?
Money. And so, before they went on the raid, did you pay them with cash?
Probably not.
No, you told them you get to keep whatever you take. So that was how they were going to get paid.
Gotcha.
So, poor planning, poor contingency. A couple times the Massachusetts guys went up there and they lost.
Ooh.
So how do they're coming back and they're like, hey, they promised us some stuff. If we went and fought, how do we get our payday? And so then they would threaten the Massachusetts citizens.
Okay. Say,
hey, pay us or we're going to, instead of raiding a Canadian town, we're going to raid you. And so the politicians then, we don't have any gold or silver to pay them with, so we'll just print money that represents gold and silver that they can take to a bank and then get gold and silver for it, right? And so once you give a politician the ability to print money detached from gold, do you think they're going to be austere and conservative with, or what do you think they're going to do?
Probably be pretty liberal with that.
They're going to go bonkers.
Yeah.
Because they can. Because a politician is just concerned with getting the next election cycle, right?
Uh-huh.
So Massachusetts start printing money. Within 3 years, their currency is completely worthless. So
this is like the colony of Massachusetts. Yeah.
Yeah, completely worthless.
Uh-huh.
And so then a couple other colonies did this, and then finally the Britain said, no more printing money in the colonies. So was completely outlawed.
Yeah.
It was like it was one, it doesn't get mentioned in history classes, but this was one of the colonists' gripe is there wasn't enough gold and silver to conduct trade in the colonies. And then, because, all the Spanish gold that was getting mined ended up in Europe. So there just wasn't enough medium of exchange.
Right.
So they wanted paper money. The problem with paper money is what we just discussed.
Right.
So this doesn't hit the history books, but this was one of the colonists' beefs.
Yeah.
And so then the Revolutionary War happened, and we talked about a previous podcast. The continental dollar went to zero because we had to fight a war. We had to beat the greatest army on earth. How are we going to pay for it?
Got to print your own money.
And remember, it was a tax revolt.
What's
so
that?
they couldn't exactly say, hey, guys, we're going to raise your taxes so we can fight a tax revolt. So their only option was to print money.
Yeah. There were some patriots, you could say, like, was it Robert Morris?
Yeah.
He was lending a lot.
With its own personal notes.
His own, right.
Off his own personal collateral.
Oh, wow. Okay.
Yeah.
Interesting.
I
So it's not that he was like giving gold.
He had stores of gold.
Okay.
And so after the currency collapsed,
Yep.
and you had angry, non-paid soldiers, what do angry, non-paid soldiers do?
Go pillage Canada, I guess.
Or whoever's in front of them.
Yeah.
They riot.
Yeah.
And so Robert Morris was signing personal notes.
Right.
So the whole point of a note is, hey, does the receiver of the note believe there's value in it? So there used to be 50 banks in the United States, and you had the Bank of St. Louis. If the Bank of St. Louis wasn't trusted in New York, people wouldn't take Bank of St. Louis notes.
Sure.
And so people would take a Robert Morris note.
Right. Because they trusted that he would pay it back.
But you talk about
It'd be good for it.
sacrifice.
Yeah.
This guy pretty much took his own bankrolled the entire United States Army.
Yeah.
And so, but then he came up with the central bank, and that's why all the libertarians don't like him.
Oh, okay.
Subject of another podcast. But so it's
That's why it's canceled.
yeah, he got canceled back. He's been canceled by libertarians because
Okay.
him and Hamilton, they don't like the central bank.
Yeah.
So we win. The Continental goes to zero, but somehow we still win the war. And so I'm like, wait a minute. That must means you can still win even in inflationary environments. And so give me 1 second. So this is one of my main revelations from the Rothbard book is, what do the Marxist professors in universities right now say? Who is a lender and who is a borrower? Rich people or poor people? What's a rich person, a lender or a borrower?
Lender.
Okay.
That's what I think that the professors would say.
Okay.
Right? Yeah.
What would the professor say who the borrower is?
The poor people.
And so it's completely opposite. Well, it's not really opposite. So this is a quote from the Rothbard book.
Yeah.
So one intriguing aspect of both the Massachusetts Land Bank and other inflationary colonial schemes is that they were advocated and lobbied for by some of the wealthiest merchants and land speculators in the respective colonies. Because these people benefit from inflation and creditors lose. Realizing this fact, older historians assume that debtors were largely poor agrarians and creditors were wealthy merchants, and therefore the former were the main sponsors of inflationary nostrums. What's that mean? Is most history professors were saying it was the poor farmer asking for inflationary schemes, because farmers also want cheap, easy credit because they're rich and they're not liquid.
Right. Yeah.
All their wealth is in the crops.
Right.
And they only become liquid
Very
once
cyclical.
a year at harvest.
Yeah.
So it's not poor people who want easy lending and inflationary schemes. It's wealthy people who buy hard assets.
Oh, I see.
And so this is more from the book. But of course, there are no rigid classes of debtors and creditors. Indeed, wealthy merchants and land speculators are often the heaviest debtors. Later historians have demonstrated that members of the latter group were the major sponsors of inflationary paper money in the colonies. And so the founding fathers, were they debtors or creditors?
Largely debtors, I guess.
Yeah, they were all illiquid farmers.
Yeah.
George Washington, you're reading a book about George Washington right now, right?
Yeah, he was really struggling. He was almost bankrupt by the time he took the presidency.
And the reason he was salty is all his creditors were British.
Right.
And so they had done some shady things to him. I'm not saying he shouldn't have been salty.
Yeah.
But so this was mind-boggling to me. It's like, wait a minute. Wealthy people are debtors. Middle class kind of stay out of that game, and then poor people are probably debtors too. And so it's then who's the creditor?
The middle people? No, the support people.
No, the government is the creditor. So every rich person wants the government to be the lender of last resort.
Yep.
And so what do we have today with 30-year mortgage?
Government's the lender.
Lender of last resort. So we did this real quick in the previous podcast. I'll do it again. So I'm George Washington. I see that I'm dealing with a inflationary continental dollar, right?
Yep.
I'm going to buy as much land as I possibly can with this with this dollar I know is going to go to zero. And I'm not saying he knew this, but you could look at history and suspect it. So I buy a tract of land with a continental dollar, and the continental dollar goes to zero. What does that mean for me?
Well, you still got a lot of value in that land.
You have intrinsic value in the hard asset.
Yep.
So with a fiat inflationary currency, the value of that currency is constantly fluctuating, generally going down. And if you have a hard asset, whatever new currency takes over, the hard asset is still valuable in the next currency.
Right.
Like the houses people invest in right now, it's valuable if let's say we went all crypto.
Yep.
And the dollar went to zero.
Right.
You would pay the bank back because it's in the banking terms that you pay it back with zero. Or you pay it back with the American dollar.
Right.
So let's say the American dollar went to zero, right?
Okay.
But you were rich in crypto and real estate. Would you be in a good position or bad position?
You're rich in crypto?
Yeah.
Yeah. We'd be in a good position because I assume that the dollar is worth nothing, and
your
crypto is worth a lot compared. Yeah.
You would still use your dollars to pay back,
right.
Even though they're worthless. You'd still pay back the loan in worthless dollars,
right?
And you wouldn't pay them back right away.
Fixed amount, right?
Yeah, you'd let that worthless loan play out as long as possible,
right?
So it's the same thing with a rental property. Like, do you believe the American dollar is going to go up or down in the next 30 years?
Yeah, go up in general.
In value, the American dollar.
Oh no, down.
It's going to go down.
We'll have inflation.
Yeah.
Yep.
So the value of that dollar is going to go down, and then what's the value of the house going to do?
It's going to go up.
Yeah, it's probably buying power wise and adjusted for inflation. It'll still go up.
Yeah,
but
it's an asset.
Like you're back 10 years of that loan payment. Are you paying the bank back with good dollars or bad dollars?
You'll be paying back with bad dollars,
which is hilarious to me.
Yeah, it's a fixed amount.
Not only does your fixed amount mortgage payment stay the same, but then you get to pay them back with less valuable dollars. Like once I understood,
you're blowing my mind right now. This is like wild.
But yeah, once I understood this, like how could I not invest in this?
Right.
And so I was like, wait a minute, maybe there's a way to win from inflation. And so it's like it seems to me that I need to buy assets in the inflating currency, and then why would I use my own money? Why not just borrow somebody else's money? Because if I use 2020, if I would have used $2,005 when I first started buying and paid cash, I would have been, spending some real money.
Sure.
Now I'm paying back with the same mortgage payment for my mortgage I've been into for 20 years.
Yep.
I'm paying back with much less valuable dollars. And so I'm definitely winning. And like when COVID happened and everybody started saying inflation is going to destroy the economy, I kind of was like sitting back being like, I'm in a pretty decent spot here.
Yeah.
And then I did see a quote from Warren Buffett. Like, he's like, the people who don't get hurt in inflationary cycles are people who are producers who just get to continue to raise their prices with inflation.
Right.
Inflation destroys people who have fixed incomes or who have most of their wealth stored in physical dollars. But really, people on fixed income is who it hurts the most because they can't outproduce their way.
Right.
Does that make sense?
Yep. Total.
All right. So we went through the trade. And so when I saw, and like when Rothbard saying, wait a minute, rich people are debtors, my brain was like, ding, ding, ding. That's what Kiyosaki says, is that the wealthy are debtors. And I'm like, now I got this backed up by history. I was like, man, I think this guy is onto something. And so you don't want to be debt free. You want to be, but I would never like use debt for consumption or to go on a vacation.
True.
And so then I started thinking about my time overseas. And when I was deployed, like I got paid every 2 weeks, but I never thought about where that money came from. And then we got to, deployment, there were some bad parts about it. There were some boring parts about it, but there was also some awesome parts about it. Like I got to train and shoot every day. Like if we didn't have a mission, I'd roll out of bed and I'd go to the gun range, and then there was just stacks of ammo. And then I always ate well. And like I would come home from deployments just yoked because I couldn't party, I couldn't drink.
Yeah.
All I would do is, I'd have 100 pounds on me. I'd walk like 5 miles a day.
Yep.
And then I'd lift. And then I ate really well.
Yeah.
And it never occurred to me who paid for all that. And I was like, that's interesting. And it was just like, I never asked myself who paid for this stuff. Like going to West Point, military history classes were some of my favorite. Like I could design for you like the Battle of Gettysburg, but no one ever said who paid for Gettysburg.
Paid for it.
It was like, we don't train our military officers to think about who pays for all this. Like, and soldiers are expensive.
Yeah.
And so then I started doing a little more thinking. It's like, well, wait a minute. Taxes pay for wars and soldiers. And then I started thinking about what are the big wars for like human liberation. And I had a list of them. They're the Magna Carta, the English Civil War, our Revolution, and then the French Revolution. Those are all tax revolts. Generally, they were tax revolts from taxes that were raised for paying for a war. So like the Magna Carta.
Right.
Oh, you're connecting the dots here.
Yeah.
You ever thought about this? I know you're a history buff.
Yeah.
So the Magna Carta was a tax rebellion in response to Richard the Lionheart wanting to fight the Crusades, right? Then the English Civil War was a rebellion against the king's spending after the 30 Years' War. Our Revolution was a tax rebellion against the British who were trying to pay for the French and Indian War.
Right.
And then the French Revolution was a rebellion against King Louis extravagant spending on a lot of stuff, but also paying for our revolution.
Right, yeah.
And I'm like, wait a minute. Inflationary cycles generally, and Murray Rothbard talks about this, but they revolve around wars. And so we've always had massive inflation because they start printing money to pay for wars. Going back to those
That goes back to the Weimar Republic, too, what you were saying. That was a response to World War I debts.
Yes.
Yeah.
And so we've always had an inflationary cycle after the Revolutionary War, War of 1812, Civil War, World War I, World War II, and the Vietnam War. When did we go off the gold standard?
71.
Because we were trying to pay for...
Was that was Vietnam?
Yeah, we're trying to pay for Vietnam.
Pay for Vietnam. Wow.
So here we go. Here is a government's options when they want to pay for a war. And I'm just bringing this up because you have to understand the relationship between war and printing money and inflationary cycles and who wins and who gets hurt from inflation. So option one is to tax, but we just talked about can't tax because that causes rebellions, right?
Right.
Two is borrow. It's hard to borrow at the beginning of the war because the lenders have to be convinced you can win.
Right.
So borrowing is not an option to fight a war. Nobody was lending us money to fight the revolution.
Right, yeah, that didn't come till, after like Saratoga?
Yeah. And then even World War II, like the economy didn't really start. We couldn't borrow money until midway, and it was like, oh, okay, these guys are going to win.
Right.
And then part of the reasons Japan and Germany lost is like no one was lending them money anymore because it was clear they were going to lose. And then number three, the easy option is just to print money and inflate the currency. And so generally it's a combination between 2 and 3, borrowing and then printing money. But printing money is always the best option. So here's a pattern I saw that started to emerge. Government's not willing to tax because they don't want to start a rebellion. They can't find lenders. So they inflate the currency, pay for the war, let society deal with the consequences. It's pretty much like a 2,000-year cycle.
Yeah. Well, I'm thinking about Shays' rebellion after the Revolutionary War.
Well, the whole reason the Articles of Confederation collapsed is
Right.
because the currency collapsed.
Right. Exactly.
They had to unify the country to so that people could trade again.
Right.
And so, now since World War II, we haven't had a major war, right?
True.
So, but do you think that stopped the politicians?
No, definitely not.
So then they just created new, not hot wars, but cold wars. So we had the real Cold War. Then we had the war on poverty. Then we had the war on drugs. Then we had the war on terror. So then most recently we had the war on COVID. So whenever you see the government talking about war, something needs to go off in your head like ding, 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 ding. Oh, they want to spend some money. Because, do I think it was important to print a bunch of money and do war bonds and borrow money to beat the Nazis? Absolutely.
Right.
It's not always a bad thing, but just know an inflationary cycle is coming.
It's coming.
And so in 2020, when the government just started handing out EIDL checks and money, I was just like, okay, cool.
PPP left and right.
Gear up for some inflation. Here we go.
Yeah.
And then me selling real estate was like, okay, gear up to sell a bunch of real estate because it's the best cash flowing real estate hedge.
Wow.
And so the other thing, this is not a Republican and Democrat issue. Like Bush added 5.8. He doubled the national debt. Obama added 74% to the national debt. Trump in his first 4 years did 33. And then Biden, he did about another 10%. So it's both parties who like to spend money.
Yeah.
And so we could get angry and we could start the Libertarian Party, right? Or we could just look at the system, and this is it's a 2,000-year pattern, really very clear pattern in the last 500 years, and we could use that to our advantage. Because like Robert Morris, did he get poor or wealthy in the Revolution?
I would assume wealthy in the long run, yeah.
He knew how to benefit himself from an inflated currency.
Yeah. Yeah, I assume Civil War too, all the people that bought the bonds, they probably did very well in the long run. The Union bonds, I mean.
So next we're going to move on to Ray Dalio.
Okay.
But so in the Civil War, they went off the gold standard. They went to greenbacks, right?
Right. That's when it happened.
And so I was reading a book about Vanderbilt, one of the wealthiest. He was a shipping magnate in the Civil War. But as soon as he went off gold standard, he borrowed a bunch of money, bought a bunch of boats, and then just made a fortune. Like the stock market went nuts once the dollar was detached from the gold standard.
Right.
Because what did they know? They knew lending would get loose and people would start spending money and there'd be a boom. And so the same thing happened. So Ray Dalio, if you don't know, he owned Bridgewater, and he's wrote a couple of great books called Principles. And by the way, if you're listening to this and want to hear just book reviews of awesome books that'll help your investing thinking, let me know. And we'll make some book review episodes. Like Principles, one of the greatest books ever.
Drop it in the comments.
What's that?
Drop it in the comments.
Exactly. And then his next book was Principles for Dealing with the Changing World Order, and he talks about inflation. But so Ray Dalio in the 70s, when they took the dollar off the gold standards, he bet there'd be a crash because he's like, inflation's going to go nuts, the market's going to go down. The market exploded because the dollar was detached from the gold. And so it was like game on. Let's borrow money. He knew the government was going to start, or he didn't realize the government was going to start spending money and the stock market was going to skyrocket. And you could look back at the stock market. Once we got detached from the gold standard, the stock market bumped.
Yep.
But and then inflation got a little bit out of control. There was actually stagflation. And then to cover stagflation, Reagan had to raise the interest rates to like 12 and 13% for like 2 years to get that down.
Get that down.
So subject for a different podcast. So let's go to Ray Dalio. And in this book, this gave me a lot more clarity in inflation. So he said, here's the 3 biggest risks inflation causes for investors. 1, portfolios are not going to provide enough return to meet their spending needs. Because remember, if you're getting a return in dollars and the buying power of the dollar you're getting that return with isn't as strong. And so you might have this big pile of assets and you might be getting dollars back, but it's not going to keep up with your spending needs for inflation. That kind of goes back to the fixed income people.
Yep.
They have a fixed income and can only buy less or less. The second biggest risk is that portfolios are ruined. Just, the economy tanks.
Yeah.
And then 3, and the most likely, is that a large share of their wealth is taken away through taxes, wealth distribution, and inflation. And so, go ahead.
It's totally possible to lose your shirt.
What's that?
It's totally possible to lose your shirt in that kind of environment.
The other problem with inflation is it causes investors to start doing crazy things. So you're trying to goose your return, and so you take higher risk, risk that you shouldn't take. And so that's how people would lose their shirt.
Yeah.
And so the future consequences of money devaluation, as we're talking about it, hard assets are going to go up.
There was a lot of that right after COVID. I remember just people taking huge risks in different investments because there was so much money.
Because money was loose, and they're like, I can get these returns.
Yep.
And then we could talk about this. 2023, real estate took a little bit of a hit. I was speculating on certain flips, and then I had a couple deals where I lost a ton of money on these deals because, the rug got pulled out from under me.
Right. That's fascinating. I know in the startup world, tons of startups got invested in 2021, especially, was like a high watermark year.
Because there was free, loose money looking for a return.
And then so many of them went bankrupt.
Yeah, once the Fed was like, okay, let's pay attention.
Yep.
And they raised interest rates.
Yep.
It was like musical chairs. The music was over, and no other investments, and then returns went down. So it's like it's a boom bust cycle.
Right.
And so here is Dalio's predictions of what's going to happen since we live in a fiat currency economy. So debts held in the reserve currency, that's currently the American dollar, are growing too fast to be paid back with hard money. So what's the government do when it doesn't have the money to pay something back?
Print more.
So money will be printed to service the debts on the current debt. They're not going to pay it back with gold or silver. And then here is the key part. Interest rates are going to be held low, below inflationary and growth rates. So the government has to keep the economy going. The government has to keep interest rates lower than they should be to get especially the American debt to pay the debt back without having to print more. So it's this vicious cycle,
right?
Where they have to print more to catch up. They'd have to raise interest rates. They won't raise interest rates because it would shut down the economy. And so then Dalio goes on. It's like the biggest risk is the currency of value of money. To anybody investing right now, the biggest risk is the currency value of money. So it's not that debtors are going to default. That's not, the big foreclosure crisis. That's not coming. That's not a big risk right now. It's that creditors' assets will lose value. The creditors' assets will lose value.
Yeah.
So debtors, creditors, right?
Right.
We've already talked about it's great to be a debtor.
Yep.
And the reason is because with inflation, the creditors' returns are not high enough to beat the inflationary effects.
Right.
Just like how we talked about, I can't wait to pay the bank back. I can't wait to pay my creditor the bank back with worthless dollars 20 years from now in my houses. Like the only reason that loan exists is because the government's backing it. So the creditors' assets are losing value and the returns will not beat inflation.
Sure.
So if you're looking to get wealthy right now, you have to make sure you're investing in things that are going to beat inflation.
So is there always have to be a reset? Like I think about Rome.
Yeah.
So like Rome had a ton of inflation, tons of debt. Everything was operating on debt. And of course it collapses, right?
Yep.
And we talked about a few examples in history of like, new civilizations, the French Republic, the United States. Is there always a reset?
Well, so what Dalio says in the past, yes, but what he likes is a soft land. He believes what the Federal Reserve's job to do is create a soft landing. So how they bumped interest rates and then didn't crush the economy, we kept driving on.
Right.
But like I'm not a huge fan of the Federal Reserve, but I got to say, like, the soft landing, it appears that they might get there.
They might have landed it,
Yeah. So the hope is there'd be a soft landing. And so I don't think inflation's a silent tax. You want it to be like boiling frog legs. Like you keep the frog in the water and you turn the water up slightly so they don't know that they're actually cooking.
Yeah.
That's what I think inflation is. That's what I think the Fed job is to keep inflation going, but not to an outrageous level like we're like in Zimbabwe.
Right.
So the hope would be that, hey, we don't have a great reset, right? But technically, when we took the dollar off the gold standard, that was a reset.
Sure. Yeah.
Not a great
that's
reset,
good point.
but a reset.
Right.
And so, I've always asked myself, is there a reckoning? Maybe.
Yeah.
But if there is and the currency collapses, good thing I got a ton of hard assets.
Yeah.
And so, so then let's talk about who then are the winners in an inflationary environment.
Yeah.
It's the
I want
people.
to know.
It's the people, because like I didn't want this to be depressing. I wanted this to be like, how do I win?
Yeah. How do you position yourself in such a way to benefit?
Because it's hard to invest when there's variability and you don't know what's going to happen. But here's what we know. The American dollar is going to go down in value. Trump might slow that decline down. Great. Good for him, right? But still, the dollar's going to go down in value. So you want to have hard assets that are going to at least maintain their value. And then compared against the dollar, they're going to go up in value. Then you want to use other people's money in today's dollars to purchase the asset, and you want to pay them back with lower value dollars.
Right.
So there's appreciation, leverage.
Another
Then,
constant.
As you're making money, you want to make sure you're getting the government's rewarding you with taxes to buy those houses, Pillar 3, tax advantages. And then finally, over time, you want the cash flow gap to open up. And then that's how you beat inflation. Because remember, there are winners. And so the winners are the productive people who use other people's money.
Boom.
That's what I got for the podcast.
I love it. And I understand now why you call it the fifth pillar, because the way that it works, supporting the whole structure, so to speak.
Yeah, like if we were on the gold standard, well, one, there wouldn't be the 30-year fixed mortgage. But if we were on the gold standard, I don't know if I'd be a real estate investor. I'm sure I'd own some of it. All the founding fathers thought it was good.
Yep.
And so I'm sure I'd own some of it, but I think it is an American's patriotic duty to get 20, 30-year. Every patriotic American should have 20 rentals.
Boom.
That's my fundamental belief.
I love that.
So if you're curious about learning more about getting rentals, why don't you reach out to somebody on my team and get on a call, see if we can start helping you build a portfolio. And if you got value in this, this is the video I do that gets the most feedback, that everybody loves it. And so I do love being able to talk about wars and economics.
Yeah.
The only thing we didn't throw in was religion this episode. Maybe we'll say that for next episode. So if you found value in this podcast and you think somebody else would, please like, share, and subscribe it.
See you next time.
So if you like what you heard today and you want to learn more, sign up for a discovery call with one of the Vreeland Capital success coaches at jimmyvreeland.com.